Ripple XRP news. Reserve Bank of New Zealand and Ripple. Massive statement from Monica Long and CBDC. Hello guys, welcome to our channel. Today in this video, we will discuss the Reserve Bank of New Zealand and a massive statement from Monica Long and CBDC. But before we start, make sure to give this video a big thumbs up. And if you're new to the channel, don't forget to subscribe before leaving. Also hit that bell icon so that you get notified whenever we upload a new video. For now, let's get back to the video straight away.
Want to win an iPhone 12, maybe a MacBook Pro? How about $500 cash? You decide. All you have to do is comment the secret hidden message somewhere in this video and leave a like on this video and subscribe to the channel so we can keep affording these giveaways.
The Reserve Bank of New Zealand has raised the official cash rate for the second meeting in a row as it moves to counter rising inflation. But Australia is not in the same boat yet. New Zealand's central bank on Wednesday raised its cash rate by 25 basis points to 0.75%. The bank's second consecutive rate hike comes as it withdraws pandemic stimulus that has helped drive consumer price inflation to its highest point since 2010. It expects CPI inflation to jump above 5% in the near term before returning towards its 2% target over the next 2 years. The near-term rise in inflation is accentuated by higher oil prices, rising transport costs, and the impact of supply shortfall, the bank said in a statement announcing the interest rate hike. The central bank flagged further tightening given the medium-term outlook for inflation and employment. In contrast, the Reserve Bank of Australia, RBA, is sticking to its thesis that interest rates on this side of the ditch will not likely rise until 2024, despite bank economists predicting that wages will grow faster than the central bank expects and could force its hand sooner. Why do bank economists think the RBA will move on rates by 2023? The Commonwealth Bank predicts Australian house prices will be about 7% higher before a 10% drop in 2023. The keys to CBA's forecast is that the Reserve Bank of Australia will move on lifting the cash rate to at least 1.25% by the third quarter of 2023. Interest rates become a headwind on property prices as they are rising, the bank noted in the recent report. That is the place we believe we're moving towards over the next 2 years, given our expectations for the RBA to commence normalizing the cash rate in late 2022. Its report predicted that the economy will be at full employment by the third quarter of 2023 and that annual wages growth will have pushed to the RBA's desired 3% range, forcing the central bank to lift the cash rate. CBA's report also argued the return of migration would lift demand for inner-city apartments more than standalone housing initially. A lift in population growth as the international border reopens will boost the underlying demand for bricks and mortar, particularly inner-city apartments, it noted. As such, we expect house prices to decline by a little more than apartment prices over 2023. Ripple is piloting a private version of the public open-source XRP ledger that provides central banks a secure, controlled, and flexible solution for the issuance and management of digital currencies. With over 80% of central banks actively exploring some form of sovereign-backed cryptocurrency, new central bank digital currency (CBDC) are bound to emerge. Each new CBDC will have unique goals driven by its country's specific market challenges and opportunities, unavoidably leading to different technologies and implementations, leaving the world with an array of CBDC solutions. CBDC challenges. Distributed ledger technology will be the basis for most CBDCs, just as it is for today's cryptocurrencies. While central banks can tap into existing blockchains to get CBDCs up and running quickly, most ledgers are not built for payments and cannot handle the volume of transactions that a successful retail CBDC will require. Most blockchains are public ledgers, visible to all and updated by a broad network of validators. A central bank requires more transaction privacy and control over its currency than a public ledger can offer. So, it will most likely opt to create a CBDC on a private ledger that can also operate at the required scale. Additionally, interoperability, the ability for a private ledger to connect with today's existing global financial infrastructure, as well as other CBDCs and other digital currencies, will be critical. In fact, in its 2021-22 innovation program, the Bank of International Settlements identified interoperability for cross-border payments as a significant priority for CBDCs. The CBDC private ledger. The CBDC private ledger is based on the same blockchain technology that powers the XRP ledger, XRPL, which means that the CBDC private ledger is built for payments. This also means the CBDC private ledger is designed for issuing currencies, with over 5,400 currencies issued on the XRPL over the past 8 years, including its native digital asset, XRP, which can be leveraged as a neutral bridge asset for frictionless value movement between CBDCs and other currencies. Moving money on the CBDC private ledger will be cost-effective, reliable, and close to instantaneous. Transactions can also happen at volumes required by central banks. The CBDC private ledger will handle tens of thousands of transactions per year, TPS, initially, potentially scaling to hundreds of thousands of TPSs over time. Transactions on the CBDC private ledger are verified by the same consensus protocol used by the XRP ledger, which is far less energy intensive and therefore less expensive, and 61,000 times more efficient than public blockchains that leverage proof of work. In addition to leveraging the XRP ledger technology, the CBDC private ledger is also supported by RippleNet Technologies and the Interledger suite of protocols to enable ultra-high throughput use cases such as micropayments. The CBDC private ledger meets even the highest security standards for central banks. Each has complete sovereignty and the ability to customize based on their unique privacy and policy requirements. The core technology behind this new CBDC private ledger has been running for more than 8 years without incident and with billions of dollars of value transacted every day. Time to define the future of money. Ripple has a proven track record of successfully connecting disparate payment systems, championing blockchain utility to solve global payments, and is trusted by hundreds of financial institutions worldwide. We are currently engaged with central banks worldwide to understand their goals better and assess how the CBDC private ledger can help achieve them. We believe the solution will overcome the significant challenges around creating and managing a sovereign digital currency while amplifying the value and benefits for central banks, their partners, and, above all, the millions of people who will use it. And we're just getting started. We are also working on the fresh approach where central banks will join a network of CBDC ledgers that enables full settlement interoperability while allowing each member to retain their monetary and technical independence. We believe this will be a game changer for central banks and are excited to release more details on how it works very soon. The World Economic Forum, WEF, looks at Ripple's native currency, XRP, as the most relevant cryptocurrency in the emerging central bank digital currency CBDC space. In a report published early this year, the WEF says that central banks and government agencies are looking at the potential of CBDCs to solve perennial global financial issues such as financial inclusion and the stability of payment systems. The Geneva-based international organization also made a clear distinction between CBDCs and cryptocurrencies. CBDCs is a digitized version of sovereign currency, created and issued by and a liability of the country's monetary authority. CBDC differs from other forms of digital and virtual currencies, including cryptocurrencies such as Bitcoin and stablecoins, which are not issued by central banks or typically considered legal tender. Although the WFE draws a clear line between the two forms of digital assets, it named XRP as the most relevant cryptocurrency in the wholesale CBDC space for intra and interbank payments and settlements. In a recent blog post, Ripple notes that central banks worldwide are locked in an arm race to develop their own CBDC. The payment startup also explains how central banks can leverage XRP to facilitate and support the use of CBDCs. Is Ripple untouchable? However, the big problem Ripple has is optics. How many central banks will be willing to engage with a company that's in a legal battle with the SEC about whether XRP is a security? Moreover, if Ripple loses its SEC battle, the company could be crippled by private legal claim. That uncertainty is enough to put off conservative central bankers. But there are two possible ways of getting around the issue. Firstly, if Ripple is serious about CBDC and receives the right kind of feedback, it could set up a subsidiary or separate company to do this, one that could potentially be acquired if things go pear-shaped for Ripple with the SEC lawsuit. But the technology is also open source, so perhaps the central banks could try it out directly. While it wouldn't have the required privacy adaptations, the ability to turn it from a public to a private network should be simple because of Ripple's design. XRP Ledger has a unique node list, which is a trusted set of servers. The central bank can control this list. That should be enough to test whether the solution is sufficiently scalable. That's it for today, guys. We'll see you next time. Until then.